Hey everyone. This week, I'm going to share 4 reasons commercial real estate transaction velocity is primed to increase in the coming quarters. Through the first half of 2025, commercial real estate investment activity was 10 to 15% below the pre-pandemic average from 2014 to 2019. We're still in the process of tabulating the third quarter totals, but they appear to have increased a bit compared to the third quarter last year. And ultimately, I think deal flow in 2025 will be on par with 2016 levels. A variety of forces restrained deal flow in 2023 and 24. The rapid rise of interest rates tightened yield spreads between cap rates and the cost of debt capital, pushing many assets into negative leverage positions on acquisition. But the reduced transaction flow also reflects the tougher climate for raising capital and tighter lending standards. Private investors continue to drive the bulk of sales activity with a 59% share of transactions in the first half of 2025. That said, the flow of capital into commercial real estate investment funds has begun to increase. On average, the various investment funds have raised about $30 billion per quarter this year, which is above the $28 billion quarterly average over the last 10 years. Now, that's still well below the peak quarter of 2021 when $68 billion was raised, but the upward trend is a positive sign. Interestingly, the total number of funds raising capital has increased, but each fund has been raising less capital than the historic norm. This year, about 180 funds were active each quarter, and they raised an average of $173 million each per quarter. Comparatively, at the peak of the market during the late 2021 and early 22 period, there was a quarterly average of about 183 funds that raised an average of $397 million per quarter. So raising capital in the current climate remains challenging, and each fund is generally raising less money individually. But in aggregate, it looks like the flow of capital into commercial real estate investment funds is beginning to rise. And ultimately, that will support increased deal flow. The other side of the equation is debt capital. And the lender composition in 2025 is showing an uptick in bank lending. Over the last couple years, banks stepped back from commercial real estate lending in the wake of a couple of high-profile bank closures and as many banks deleveraged their commercial real estate portfolios. But with repaired balance sheets, and the prospect of more liberal regulatory policies beginning to emerge, banks are re-engaging the commercial real estate lending market. And most lenders are no longer tightening their standards, which is contributing to a modest rise in the average loan-to-value ratios. For multifamily properties, the average loan-to-value has risen to about 62%, and for commercial properties, the average LTV is in the 56% range. And according to the Mortgage Bankers Association, the flow of debt capital is expected to rise. In the most recent MBA forecast, they predict commercial real estate lending will be 30% higher in 2025 than it was last year. And lending is expected to increase by another 35% in 2026. So the availability of both equity and debt capital is rising, while interest rates have begun to taper. At the same time, depending on the property type, asset class, location, etc., average commercial real estate cap rates have risen by 80 to 120 basis points since 2022. That combination of lower interest rates and increased cap rates has widened the yield spread sufficiently to support positive leverage in many cases. Agency debt on multifamily properties is currently in the low 5% range, while debt on commercial real estate assets is in the low to mid 6% range. And the convergence of these 4 factors, increased equity capital, increased lending liquidity, lower interest rates, and higher cap rates, is a recipe for boosting commercial real estate investment activity through the remainder of this year and into 2026. Then, when you stack on the reduced construction outlook for all commercial real estate property types, the prospective long-term return potential of the commercial real estate sector becomes even more positive. But to see that opportunity, investors always need to keep their eyes on the horizon.